For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about high probability trading process. Most important thing to understand is that when you have a process that you can come to the screen with each and every day, each and every session, you know exactly what you're looking for. And if it's not there, you're not taking trades, chasing movement. Recently, I got a comment, everyone can in hindsight, but I'd be surprised that anyone can qualify his setups to trade live in any given market. So here we go, the process again for that individual who thinks it's hindsight, because I'm going to tell you what, tomorrow, today, next session, you're going to have a 100 pip box, you're going to have levels, you're either going to be up high or down low, you're going to have a timing window, and there's either going to be a setup or there isn't. And you're either going to execute it or you're not. And then your understanding, your mindset around trading is either going to be that you're going to keep trading and keep chasing moves, or you understand that there is a scalable setup that you take, you lock in the money, and then you go back and rinse and you repeat the process over and over again. Hindsight is when you don't have a process, when you actually don't have an edge, and you still go back to the screen hoping that something will be better or different next time, when in reality nothing's different, and so your results will be the same. They'll be inconsistent, they'll be up and down, and you don't actually have a business, a trading business, a scalable, reproducible, rinse and repeat process that can grow your trading business, your trading account, and also the understanding of why not to do anything else. So again, we're going to talk about the 100 pip box, levels, timings, setups, trade execution, and your mindset around your trading. So I've said this before, we have a 100 pip box. Traders have said, what about, this instrument when it goes 500 pips? In the timing window, regardless of how much your daily high and low has moved, you're in a 100 pip box. It might be opening up down here. It might be opening up in the middle. It might be opening up top, but you are in a 100 pip box regardless of how big the range of that day is. Then understanding the bottom is the buy area, the top is the sell area. Now, we're going to talk a bit more specific about setups, because understanding where you're at in that box can also be affected by day 1, day 2, day 3. The stair-step method, whether you're going down or you're going up for the big move down or the large move up. And in the day itself, we might have 3 sessions. We might have 3 levels of drop: Asia, London, New York, or Asia. Could even be Asia comes down and works into the bottom of the low to go up. So when you understand that, the next thing is understanding the levels, meaning that instead of these people who keep going, but where did you get in? Where did you get in? How did you get that move? Where did you get in? Understanding that the level itself is where we're targeting for our entry or our exit. Now, I've said this over and over again. Once they lock in a level, it's the price that I'm focused on. It could be, we could have the market coming down. I'll just draw this in. The market comes down into the Europe-London window, and my thesis is already that the low is locked in, and I want to get filled then at the level. I don't sit there worrying about a gap, liquidity hunt, all these things. The next most important thing then is the timings. So again, for the person who is talking about hindsight trading, I want you to understand that every 15-minute rotation, especially in the hour, are critical to understand. If you want to trade for 1 hour a day, and I'm looking for a buy low setup down at that level, I'll just change this. If I can get this back. So if I'm looking at a buy low setup in this lower quarter, I want to be understanding the importance of timing. So the first hour might, as I've said, is put in a high and a low. The second hour may trap volume and break structure. The third hour may be the trade. Now sometimes we're going to get it that the first hour is the trade. They've already come down and locked in the low, and it's a first hour trade. The same thing applies for shorts. We can get a first hour trade that locks in the high and the low, and then the second hour is the move, the equity hour. So if you understand the box, if you understand the timings, and then the high and the low of the day, the session, whatever, the week, that comes back to day 1, day 2, day 3, knowing if the market has moved 3 levels, and then being able to understand whether or not you have a setup. If you don't know what your setups are, then I have to ask the question, what is it that you're trying to trade? For that trader who, again, is talking about hindsight, if I'm going to the screen looking for the red car, and the red car shows up, I'm going to drive the red car. If you're showing up at the screen looking to catch a ride on a cab, then you're just sitting there hoping to catch a ride on one of the cabs that's driving by. They could be going from one side, coming from the right side, or coming from the left side. You're just trying to catch a cab. You don't know which direction you're going to go. You're going to catch the first cab. So if you understand the importance of everything that I've just talked about in terms of go back to that first screen, 100 pip box, levels for buying and selling, but also 3 levels of rise, 3 levels of fall, timings, setups, trade execution, and then your mindset around knowing, number 1, to execute only your setups, and number 2, once you've locked that in, to get off the screen, because the market changes after it makes that move. If you keep sitting there trading based on your indicators or your, the false perception that you have all this excellent skill in trading, you'll end up giving it back. And I know several traders know this. The longer you trade, when you have a good run, you get overconfident, you keep trading, you keep taking more trades, and you end up giving it all back because the market trading changes, because now they'll go back into building up order flow. So these are all critical in terms of having the process to identify the best trade setups. Okay, you can look at any instrument. You need to go and do your own homework, because everybody's got the same thing. Time of day, 100 pip boxes, 25 pip increments. If you don't have that, it's available on TradingView. It's sweet spots for MT4. If you don't have it, I know lots of traders use nothing at all, but I'm telling you that price and time are the 2 most important things. And when you understand, we talked about 25 to 50 pips outside of the range is a normal stop hunt. All of these things will start to come together. Day 1, day 2, day 3, week 1, week 2, week 3. So we look at the Canadian dollar. We can look at last week, but we'll look at today, because again, for our friend who's the hindsight trader, I want them to get this so that they know next time they actually might have a trade set up. Before they go into that session, they may actually have a plan and levels identified for a potential setup, and then the aha moment, instead of them going, well, yeah, it's great in hindsight. So if we look at our 100 pip box, we have a new day. Again, it doesn't matter. We'll look at a few examples. We have our US CAD dollar. So Asia, we start the day between 25 and 50. They break the previous day's high, which again is just, all that is, if you step back, is realizing that the high is not yet in place. So that continuation, though, has now triggered other time frame traders. But it is only evident that the high of the day is not yet in place. But we are now between 50 and 75. So you remember I just went over the box. The top of the box is a sell area. The bottom of the box is a buy area. Now again, when we get day 1, day 2, day 3, we'll talk about the 50% area of that 100 pip box. So we have our US CAD, we have our consolidation. Now, for traders that have been following me long enough, you know you've heard me use the expression trapped volume. Have we had 3 levels of rise from Friday night's peak formation low? So peak formation, we'll talk a bit more about that in coming videos. Peak formation, we break into the next 100 pip box and the market continues to go for 1, 2, and 3 levels of rise into the new day on Monday, day 1, our new week, and we're up high on week 3, up high. Get rid of this. And now we also have the high of the day. The market works into the high in the Europe-London window before breaking down through 50. So this is going to address a few things for people. Number 1, we have trapped volume on the 3rd level of rise. 1, 2, 3. So for Mr. Hindsight or Miss Hindsight, whoever it was. So that gives us our thesis heading into the U.S. window. This is a broken down market. Obviously, traders had the opportunity to short that heading right into the U.S. session, which I've talked about. The 7 to 8 o'clock hour New York time will often offer traders an opportunity heading into the new window. But for traders that miss that opportunity, this is a low-hanging fruit continuation trade. We have a market that's gone 3 levels. It's broken down. Now we need the vertical move back up to the quarter level. In that first hour, I've talked about first hour makes a high and a low. The market pumps back up above the quarter level. So now we're focused on levels. So again, I'm just painting an example that any pair can be traded. Any pair can be traded. It's not about pips. It's about scalable trade setups. The market pumps up, new hour, middle hour, pumps up above the quarter level, breaks down. So there's our breakdown inside again, and then the pump up back up for our New York Open short at the quarter level. Thesis being coming back to 3 levels of rise. Okay, and you'll notice the low of the day paints a 50 pip high low. So we've talked about this before. You need a 75 pip box to get a 50 pip move. They trap volume on the 3rd level above 50, break down in the end of the London window heading into the U.S. Open. So some traders had the opportunity to short it right off the bat heading into the U.S. window from 50. And then we get our pullback at the New York Open to the quarter level for the 25 plus pip low-hanging fruit trade, which is just the continuation trade in a broken down market. So we had first red day on Friday. I'll just bring this back up. Weekly separator. So we had our peak formation high on Thursday. We broke down on Friday, first red day, and the market blew off in Asia. So you'll notice again, heading into the end of the Friday session, peak formations above 75 heading into the new Monday, new week. Breaking down, and we'll just bring this chart up a little closer. That is a move towards the low of the previous week in the Asian session. So for traders who came along in the Europe window, we'll blow this up again. We now have a market in a 100 pip box. Asia has put in a low of the day. We're down low on day 1. They've already triggered the previous day's low from Friday, which we've talked about this before. That space, that breakout space, is easy target for a potential reversal trade. We get our London session taking traders into the low of the day, the low of the week. We have a peak formation low. They continue to go lower. London takes traders into the low down at level 1. We're down at level 1. Thesis is now I'm going to be looking possibly for a buy low down in level 1 at the low of the day in the Europe-London window. Now, this is where traders need to understand timing. So some traders would have shorted this market back to the low of the day, no problem at all. Great trade, 25 plus pips. The market then proceeds to open into the third hour and takes out the low. Now, I mentioned to a trader, new hour starts, you're at the low of the day or the high of the day. When that new hour starts, that is where our opportunity clock starts to tick. The new hour opens, triggers the low of the middle hour, the equity hour, the London hour, before pulling back up and breaking the high. Breaking structure, but that also, I'll just actually move this over. That's our 11 o'clock hour right there. That's our third hour. So we hit this trigger breakouts at the low of the London hour. The market then breaks structure and triggers in the new hour, hourly longs, before pulling back below the quarter. So again, remember our thesis is we're down at level 1. We're looking for a buy low. Now this obviously didn't happen until the gap, but it's 1 hour, 2 hours, break structure in the third hour, and the fourth hour then goes vertical back up to the top of the 00 box. So again, this break in structure, then the short squeeze back into level 1 for the vertical move. When did this happen? Right at the beginning of the middle hour in the gap. So again, for hindsight traders, if you need to, perhaps you should get a watch or a clock to understand when the new hour is going to start. They go up to the top of the box, but we've already had 3 pushes into the low of the day of the week. We've dropped down into the lower 100 pip box, and now the market, prior to the U.S. window, comes back down into that 50% area, which is our 50. So again, coming back to timings, the market is in the upper half of the box, which I said was a sell area, except now we have the thesis is that the market has locked in the low, and we are targeting back towards the high of the day, the Asian session, which again is in the upper 100 pip box. So first 15 minutes, false move, creeping trend down into the low that the market made coming above 50. And we retest at 50% for the continuation of the long trade back to the high of the day. So we're going into the new 100 pip box at the beginning of the US window. So again, coming back to setups, we've already gone down and locked in the low of the day, broken through the lower high of the Asian session, which is 75, creeping trend back into 75. So again, levels, 75 and 50 is our buy area for the retest back towards not only the high of the London session, but the high of the day, day 1. So spot crude was an excellent opportunity for traders in both directions today in the Europe-London window. But coming back to the big picture, it's very important to be able to look at an instrument the previous day and identify peak formations. Peak formation is when the market has put in a high or a low and reversed, and then we count our 3 levels of rise or fall. So we head into our new day. The market, as I said, regardless of where we're at, when a session opens, you are in a 100 pip box. And we see a very similar trade in Asia that we just saw on gold, where the market breaks out and retests 50 and 75 for the continuation into the upper 100 pip box. We trigger the previous day's high. So we no longer are in the market. The peak formation is Friday night in the US session, and they've continued to go higher. Now let's come back and look at this chart. We have a market that is coming down from 3 days of drop, 3 levels in 3 days, Thursday, Friday, and Monday. And the market has, in the end of the Asian window traded back down into the low of, into the breakout of the Asian session. So as one trader said, he felt like he missed the trade. Whenever you have the perception that you've missed a move, you have to be thinking that those traders are the ones getting caught. They've triggered the previous day's high. We have the high of the day, double zeros. They've opened the market down low, and I mentioned this again. I keep mentioning this over and over again. First hour makes a high and a low. Now in this particular case, and you've heard me say that the high and low are where the money is. That's the target. The market then proceeds to reverse down in level 1 at the end of the first hour. There's our extended W formation at the end of the first hour, and then proceeds to begin 3 levels of rise. Level 1, level 2, level 3, back to the high of the day. And our third hour, this is London in the middle, so London opens up and goes 3 levels of rise back to the high of the day. Our third hour opens up at the high with a 1 push, 2 pushes, 3 pushes to the high, engulfment of the high bull candle at double zeros after 3 levels of rise. I'll just color this in if I can get it out. Okay. This is the strike zone. That tells me the high of the day is locked in. We have our break in structure and a vertical move straight away before consolidating and continuing through the low of the session for a 90 plus pip trade. So again, escalator up, 3 levels of rise for the vertical move back down to the low of the session. The market then proceeds to come right back at the new hour, and you'll notice the creeping trend from 50 down. So that creeping trend sets up order flow for a vertical move again in the new hour. But in our gap time, we get the same thing. So again, if we look at our 100 pip box, they came 25 pips below the range before reversing and locking that in. Is it possible that double zeros may act as a low? We have our W formation in the London session that potentially could hold as our low of the day. The market comes through into that low before reversing. And again, I'll highlight this before taking out the lower highs and then into the new 15-minute US session, 15-minute vertical peak formation, consolidation at the quarter level, and then a breakdown pullback with 3 pushes. I'll just again mark this off. We're down at level 1. So for the trader who again is hindsight, if I'm down at level 1, I'm looking for buys in the timing window. If the low is locked in, I'm looking for buys in level 1 for the vertical move back up through the low hanging fruit creeping trend and the high of the session and the day. Now when we get up to that high of the day, we get our middle hour opening up and the market comes down into 50 and puts in a low of that hour heading into the New York Open. So again, thesis would be 75 could possibly be an area for a buy. The New York market has not opened yet. It goes up almost 75 pips before the New York market opens. When the New York market opens, we have our move back down into the double zeros, into the low of the session, the higher low, for the peak formation low squeeze going long in the new 100 pip box. So for traders who are struggling to get that down, you need to have a process. The process is what will allow you to capture one move, one larger move, to hold on to a trade, whatever that may be. If you don't have a process, you're going to sit there and say, well, that all looks good in hindsight. But coming back to our original summary, the process, 100 pip box, understanding the levels, the timings, understanding if you have a setup, and then knowing how to execute that trade setup, managing your risk, having a profit target, and then understanding how to get off the screen and scale those trade setups in size and not just keep trading to get pips. So this process is going to be happening in the next session. It's going to be happening in the session after that and the session after that. Unless you have a process and an understanding, you will continue to sit there and say that all looks good in hindsight. But when you have the foresight to be able to go to the screen with a hypothesis, and then the patience to allow the trade to set up, and then the knowledge and the skill to actually execute that trade, and then the mindset to know to lock it in, get off the screen because that trade is now done, come back the next day, scale it up in size. Low stress, reproducible, high probability, and highly profitable. So keep it simple, traders. Hopefully that breaks things down a bit more. Getting back slowly onto the North American time, a bit of jet lag. Again, thank you for many comments and feedback. Keep it simple, master the process, and this will all become easier and easier. Identify the best setups, execute, get off the screen. Have a great day, traders, and may the markets go with you.